Ladies and gentlemen, welcome back to the channel. Tesla stock had a pretty good day today. Not great, but pretty good. And in today's episode, we're going to discuss what is coming next for this market, what is affecting this market, and guys, yeah, there's a lot of things going on. There's a lot of the things that are thinging right now. We just had NVIDIA earnings. We had Walmart earnings. We had some economic data. A lot of our economic data has been delayed. But there's one big thing happening right now, and that is margin calls in crypto. There's reason to believe that those margin calls are sort of starting to be resolved. And we'll explain why that is and what this means for Tesla stock and for the broader markets. Do me a quick favor, ladies and gentlemen, before we get into all of this key information. Hit that like button, subscribe to the channel if you have not done so already, and check that link out down below in the description of today's episode if you guys want to come join the trading community. Now, one of the biggest things that happened today was the market started to price in a rate cut again. Now, it's not like a 25 basis point rate cut does a whole lot, okay? But what it does is it helps the liquidity situation a little bit. Now, let's rewind a little bit. What's happening? Crypto has been selling off for 6 weeks now. It started as a stablecoin issue on a single platform that led to over 400,000 crypto accounts being wiped out almost instantaneously. The problem was resolved, but the liquidity issue was not. And there continued to be a liquidity drag on this market as volume had begun to dry up, as the government shutdown became prolonged, and as uncertainty grew generally in markets. This issue in crypto turned into a semi-normal blip into a liquidity black hole. Okay? Well, that has since taken Bitcoin down about 36%. And you've been in this margin call spiral, kind of as Tom Lee put it last night. There's a couple big players out there, market makers and crypto investors, that were over leveraged. They got blown up. We don't know who they are. Tom Lee says he knows, but he's not going to list names. And that makes sense. Okay? Because a lot of retail investors and even Wall Street has been very confused to what's been happening in markets, right? We had the government shutdown, there was uncertainty, but we've gotten your earnings. You got NVIDIA earnings, you got Walmart earnings, you got economic data. And nothing seemed to help this market because crypto continued to be margin called and liquidated. And that collateral has caused a lot of selling pressure in stocks, mixed with, again, the not great, uncertainty backdrop we've had in markets that has led to a little bit of liquidity drying up, that has given us this correction. The NASDAQ fell over 8% from its high. That is a literal correction. S&P fell over 6% from its high. That is a literal correction. And small caps fell almost 9% from their high. That is a correction. But again, Bitcoin fell 36%. Not to mention Solana and Ethereum and some of the others. Well, there's reason to believe that this margin call event could be coming to an end soon. It seems like the Fed today kind of orchestrated a rate cut, right? It almost seems like the Fed just wanted to tinker with the markets a bit. And then once they realized, oh wait, we're now not going to get any economic data that's going to actually move the odds of a rate cut, they started to endorse a rate cut. Even Fed Hammock and Fed Cook did not outright shut down the prospects of a rate cut for December 10th. Fed Hammock said, quote, she's open-minded for any Fed meeting. Fed Moran, Fed Williams, presumably Fed Bowman, support rate cuts. So now you're pricing in a rate cut again. it's not that a rate cut is that important for the economy. It's a rate cut provides the liquidity. Now, um, these crypto, again, sell-offs, liquidations, margin calls end for one of two reasons. Either liquidity gets injected, okay, which you could think of as like a rate cut, or there's just so much margin calls, the margin call, and it naturally just exhausts itself. And I think you're getting a little bit of both of that happening as crypto has fallen so much. If you were leveraged in crypto, you've probably gotten that margin call already. And as a lot of Wall Street doesn't want to sell Bitcoin, what do? They start selling other assets, right, to feed that margin call. That's where this liquidity black hole in crypto feeds into stocks so much. And you can track this yourself. Like Bitcoin leads the markets by a couple of minutes. If Bitcoin has a couple good green candles, goes up $1,000, a couple minutes later the Nasdaq's going to do the same thing. If there's a couple big red candles, Bitcoin falls $1,000. A couple minutes later, the Nasdaq's going to fall. They are trading hand in hand right now. It's because of this liquidity situation. Now, again, Bitcoin has fallen about 36%. I think anyone that was really leveraged has already gotten margin called. And I think you've kind of started to naturally work this out of the markets. You can also see the RSI is at 23.5. You are very oversold in crypto already. So there's that. Now, as this situation gets better, in my view, over the next couple of weeks, you are likely going to see risk on assets start to do really well. Kind of like you had yesterday in the beginning of the trading day, where stocks started just ripping and going parabolic. I think you're going to see a lot more of that action over the next couple of weeks because let's face it, a lot of stocks have had a lot of good news recently, including Tesla, Elon's comp package getting approved, and Tesla earnings. Looks like many more cities are going to get robotaxi soon. What's happened? Nothing. Tesla stock has not went up at all on any good news. And this is largely the same across the board. Like nothing is going up right now on good news. When you have this liquidity drag, it's this liquidity black hole from crypto, it's just too much downward pressure on markets. But the reality is, we now have a lot more certainty. We have certainty on Nvidia and AI. We have certainty on Walmart and the consumer. We have certainty on the economy, the jobs market. Doesn't seem like it's doing too bad. And now we have a little bit more certainty that the Fed actually does want to cut rates in December. Crypto situation gets better into the following week. Hopefully this weekend's pretty good for crypto. And you're set up for that end of the year rally. I still think that is in the cards here. You just got to get the crypto situation settled first. And it looks like to me that is happening. Now, I do want to share this clip with you from Tom Lee. He explains why stocks have come under a lot of pressure recently. It's about 4 minutes long, so take a listen.
I had a disappointing day. Nvidia reported good results, and stocks initially rallied 2% at the open, but at 10:36 a.m., markets peaked and staged a pretty sizable decline with a 3.5% decline into the close. And that took us down 1.6 for the day. Now, again, I think many people are disappointed because Nvidia had great numbers. So what caused this reversal? Well, it's not always clear why stocks fall, but we do think there are 5 possible explanations for this. First, I think one factor behind the meltdown was that there were some tweets that created a little bit of outrage on social media. And it was President Trump responding to some Democratic veterans suggesting that they can ignore orders from Congress. And that first tweet was at 9:17 a.m. The second one came at 10:21 a.m. He said seditious behavior punishable by death. Now, notice the timestamp. That's 10:21, and the market turned down just a few minutes later. That tweet led to Democratic Congress members and leaders protesting the death threats against Democratic members. Now, the second thing that I think did contribute to the decline is the release of the Epstein files. So President Trump signed the Epstein Files Transparency Act into law and now has ordered these files to be released. There's going to be a lot of people in those files. In fact, for instance, here's someone pointing out that it could even embarrass many donors, billionaire donors. So you can imagine there might be investors who are just nervous who's going to be on that list, and it's revealed. Does it do something to markets? I think that contributed to some of the nervousness today. The third factor is crypto. Bitcoin has been selling off recently and generally has led the equities, but you can see at the open, Bitcoin peaked and began to weaken at 9:30, and the S&P followed basically an hour later. This has been the case for some time. It's something I've pointed out, that Bitcoin has been leading the S&P. For instance, Bitcoin peaked on October 10th. That's right before we had that liquidity shock, which ended up being the biggest liquidity shock in the history of crypto, wiping out more than 2 million accounts. And Bitcoin's been falling since. But as you can see here, this has led to the S&P spider peaking on October 29th. And it's something I was interviewed on CNBC today, and I mentioned that since October 10th, there was this feature called ADL that caused a significant amount of liquidations, and it was really due to a pricing error. But that pricing error has created significant holes in the balance sheet. In other words, the reason crypto has continued to have lingering weakness is that market makers who play a critical role in crypto have weakened balance sheets from that liquidation event on October 10th. Now, market makers are essential to crypto liquidity. They're essentially acting like central banks because they provide liquidity. And their pulling back is the equivalent of QT for crypto. So you can imagine crypto is suffering from tightening conditions along with a hawkish Fed. Now, in 2022, when a similar event happened because of FTX, it took 6 to 8 weeks to recapitalize those market makers and for market function to recover. So we're about 6 weeks into this process. The fourth factor is Oracle and CDS, because there was quite a lot of chatter about this. As you know, there's many skeptics of AI, people even questioning NVIDIA's numbers, but what's catching people's eyes is Oracle's credit default swaps are rising.
So yeah, as Tom Lee says, I think the crypto situation is the real problem out there. Okay? And I believe it's about to get better. You've just already seen such a strong liquidation and such an aggressive downside market response that I think the odds are growing that the situation gets better. And as the timeline is kind of lining up, if it does get better over the next week or two, you are set up for a very strong December. And you may actually, get some Christmas presents this year. Now, in option activity today for Tesla, you had 145 different trades totaling $174 million. Pretty low day as far as option activity, with a positive order value of 86%. Now, here's the deal as well. We don't have a lot of new information coming out over the next week or two, right? Because the BLS has been canceling all of these data sets and delaying them. We're going to have a bunch of data coming out on December 16th. Like, that's shaping up to be the big day. But between now and then, there's not a whole lot. But I do think there's plenty of room to get a bit of a reversal to the upside in this market. Now, for Tesla stock specifically, you're kind of in this range between the 50-day moving average as resistance, $434 per share, and the 100-day moving average as support at about $380 per share. You're literally sitting at $400 right now, so almost exactly in the middle of that. Over the next week or two, I think there's room to move to the upside. and to break above the 50-day moving average before we kind of wait and see what the economic data looks like on December 16th. Now, obviously, the Fed and how those expectations move. And again, as I said in prior videos, the Fed has historically always done what the markets have priced in. So the markets are pricing in a 64.3% chance of a rate cut and a 35.7% chance of no rate cut. Based on how much these odds moved today, they went from 28.5% chance yesterday of a rate cut to 64.3% chance today. That's a huge move on one Fed official that says they would back a rate cut. That to me seems pretty orchestrated, in my opinion, and it wouldn't surprise me if you see other Fed officials start to follow suit in their support of a rate cut as well coming on December 10th. So I think we are getting ready for an upside move in markets. I think a lot of retail investors are not prepared for this. I think a lot of people have gotten margin called and they're just not going to capitalize on this in the most ideal way. So that's why I'm here to give you a little bit of a heads up. I think right now there's a really good risk reward if you're going long in this market. I think the reward is much greater than the downside risk at this point. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.